Let's talk about open banking. It's still a relatively new idea across most markets here on the continent. Now, for those new to the concept, here's a basic, quick and dirty explanation. It's basically the idea where banks and financial institutions like, say, insurance companies will allow third parties to have access to customers' financial data through APIs, application programming interfaces, within some rules set down to guard data privacy and confidentiality. Now, some have touted the idea as the most significant game changer in Africa's financial space since the mobile money revolution swept across the continent. And their argument is that it allows for greater convenience and personalization in how banking services are delivered. And in turn, hopefully, that should help to boost financial inclusion. Regulators and banks in Africa are certainly warming up to the idea. Countries like Kenya, Nigeria, Ghana, South Africa, they've all started to create digital roadmaps for this transformation and eventually open banking. This month, Nigeria's central bank rolled out operational guidelines for open banking in the country that laid out the rules for issues like consent management, data protection and service monitoring. Now, my colleague Uche Okoronko sat down with Uzoma Dozie, the CEO of Nigeria's Sparkle Digital Bank and a former CEO of the Nigerian lender Diamond Bank, to find out what these new regulations mean for the sector and also address the criticism that these guidelines still leave very many areas open to interpretation.
You know, banks have normally exchanged information, and they exchange information through a protocol APIs. Now, these APIs are customized to each bank. Now, what open banking does says is now creating standards in which I can now publish my APIs so people can either access services from me without actually having a conversation with me. And so it is actually now scaling what was actually done between private to private organizations to the whole industry. Now, with that, those standards comes with guidelines and regulations. So if you want to participate, don't forget, we also have to, central banks, one of the central bank's prime responsibilities is financial system stability, which is and the bedrock of that is trust from the consumer. So it is like, if you want to participate in this scheme, one, you must meet certain guidelines that, address data privacy, information security, anti-money laundering, and knowing your customer as well. And so it means that they've actually now upped the game in terms of, standards in which we can actually grow that economy. Because, the only way that you can now provide services in a cost-effective manner is if you scale it through technology. And you can't do that without actually standards.
I want to talk a little bit more about these guidelines that, of course, came out early this March. According to some critics, they say these guidelines still leaves broad areas, especially issues around technology compliance and, of course, the responsibilities of banks and third parties. They say it leaves a lot open to interpretation. How do you respond to that once you take a look at those guidelines?
Like with anything, you have to start somewhere. And I think those guidelines are definitely dynamic, but it's a starting point. Now, the beautiful thing about guidelines and, technology and the way we do business today is that these things can be monitored minute by minute. And as things change, it's an iterative improvement process. So, the most important thing is that we have to start somewhere. We have to start and we have to prioritize what is important for us to grow it. One is standards. Two is making sure the customer understands there's transparency and there's trust. And three, we leverage technology to do that. And as we go along, it will get better, but we have to start from somewhere. So yes, of course, with any new scheme, there's always some, doubt. There's always some doubt and there's some criticism. But I'm proud to say that, Nigeria is actually taking the lead here. And I think there's definitely a first mover advantage in this. And so it's better to start than not start and repair it as we go along.
Quite right. But you also alluded to strong governance structures. And of course, another thing that critics say is that the continent's financial systems still remain pretty fragile and they still have weaker internal data controls. As a result, when it comes to fraud, many are sort of side-eyeing this open banking system because it could increase the number of entry points for fraudsters to, of course, try get into the system, to initiate a payment or to intercept personal information. How do you respond to that as well when we talk about sort of the fears around this open banking system in Africa?
I would say, but first of all, there needs to be more education around this, because once you are better educated, I think there'll be more confidence, more trust. And so with any new initiative, educating the stakeholders in the most simplest form is important. Now, why do I think there's no cause for alarm? It's because if you read the guidelines, it means that as a player in this business, there is a minimum standard that you must comply with. So it means that if your information system, your security system, your customer data system, how you handle data is not at a bare minimum, you will not be included. And what will happen is that, you have customers saying, okay, please, can you move, why can't you share my information with bank A or bank B or business C? And if you can't do that, it means that you have not met minimum standards for the operational banking scheme. And so customers are going to begin to think, okay, why is that? So you don't want to be left out. You have to be included.